All right, today we're going to talk about one of the most powerful institutions in the entire world, but one that most of us barely even think about, the central bank. It's often called the unseen conductor of our economy, and we're about to pull back the curtain and see exactly why.
So let me ask you a question. Who's really in charge of the money you have? You might think, well, I am, or maybe your local bank. But the real power, the ultimate control, lies with an entity that's pulling the strings from way, way up top.
So let's dive right in. What even is a central bank? The best way to think about it is like the conductor of a huge orchestra, the nation's entire economy. Its job is to make sure every part is playing in harmony, not too fast, not too slow.
Okay, so the official definition here is pretty telling. Look at those words. Supreme monetary institution. That means it sits at the absolute peak of the financial food chain. It's the big boss in charge of the country's money and this is the really important part, its credit policy. But you know, one of the best ways to understand what something is to understand what it isn't. And a central bank is a whole different ballgame compared to the bank you might use every day. Let's break down how.
Yeah, exactly. This is not the bank on your street corner. You can't just walk in, open a checking account, or ask for a loan to buy a car. Its purpose and who it deals with are on a completely different level.
And this table here, it really lays it all out. Check out the main objective. Your bank, the one down the street, its main goal is to make a profit. Plain and simple. But a central bank, it's trying to promote social welfare, to keep the entire economy stable and healthy. And ownership is different too. While your bank might be privately owned, the central bank is almost always a government institution.
And here's where it gets even clearer. A commercial bank deals directly with you, with me, with the general public. A central bank? Nope. It's the banker to the government itself and to all the other banks. It doesn't deal with us at all. It is, quite literally, the bank for banks.
So, okay, if it's not dealing with regular folks, what on earth does it do all day? Well, it turns out it has 4 incredibly important jobs that, believe it or not, affect every single one of us.
So it boils down to 4 main gigs. First, it has the sole monopoly on issuing currency. Yep, it prints the money. Second, it's the government's banker, managing its accounts. Third, it's the banker for all the other banks, supervising them and acting as a backstop in a crisis, what's called the lender of last resort. And finally, the big one, it's the controller of credit.
And you know this right here? This is the absolute heart of the matter. Its power to manage the flow of money and credit throughout the entire economy is its most crucial job. This is how it steers the economic ship, trying to avoid the storms of crazy inflation or a deep recession.
Which, of course, leads us to the billion-dollar question. How do they actually do that? How do they control credit? It's not just a button they push. They have a whole toolbox of sophisticated instruments to influence the financial system. Let's look at a couple of the most powerful ones. So, tool number 1 is the bank rate. This is basically the interest rate that the central bank charges commercial banks when they need to borrow money. Think of it like the master interest rate that influences all the others down the line.
Okay, so let's imagine the economy is running a little too hot, and prices for everything are going up and up. That's inflation. How can just tweaking this one rate help cool things down?
Well, it sets off a chain reaction. The central bank raises that bank rate. Suddenly, it's more expensive for commercial banks to borrow money. So what do? They raise their own lending rates for you and for businesses. That means car loans and mortgages get more expensive. As a result, people and companies borrow and spend less, which helps slow down the whole economy and gets inflation under control.
All right, on to another really powerful tool. This one's called the cash reserve ratio, or CRR. Basically, it's a rule that says all commercial banks have to take a certain percentage of the money you deposit with them and park it at the central bank, where it can't be touched. So check this out. If the central bank wants to tighten the money supply, it just bumps up the CRR. That means commercial banks have less money left over to lend out. The immediate result? The total supply of money and credit in the economy shrinks. It's a very direct and very powerful lever to pull.
Okay, those tools are powerful, but they're subtle. So what happens when a central monetary authority decides to use a sledgehammer instead of a scalpel? For that, we need to look at a dramatic, real-world example, the demonetization event in India.
Picture this, November 8, 2016. The Indian government, working with its central bank, drops a bombshell announcement. The country's 2 largest currency notes were, effective immediately, demonetized. That's a fancy word for saying they were no longer legal money.
Just let that sink in for a second. With that one announcement,
A whopping 86% of all the cash in circulation in the entire country was declared invalid. Imagine 86 cents of every dollar in cash you owned suddenly becoming worthless overnight.
Now, the official reasons for doing this were huge. They were aiming to wipe out black money, cash from the illegal economy, as well as stop corruption, get rid of counterfeit bills, and choke off funding for terrorist groups.
But the reality on the ground, well, it was chaotic. It caused massive lines at banks, a severe shortage of cash, and real hardship for millions of people, especially in parts of the economy that run almost entirely on cash. It was an incredible demonstration of a central authority's ultimate power over money.
And that brings us to the final critical question, doesn't it? A central bank has the power to create money and, as we just saw, the power to effectively destroy it. So is this ultimate control a guardian's tool, necessary to protect the economy, or is it a weapon so powerful that it risks becoming dangerous? That's definitely something we're thinking about. Thanks for tuning in.